One of the best performers on the TSX right now, shares of TFI International. The trucker is hitting a record high, even as it missed expectations on both the top and the bottom line. We're going to unpack this with Paige Ellis, who has been reporting on the story for us and been listening to the conference call. We've also got an analyst, Jason Seidel, joining us from Cowen. Paige, I want to kick things off with you because it seems like despite the miss, it was all about CEO commentary.
Yeah, so I spoke to multiple analysts this morning to try to square the circle, because as Amber notes, it wasn't just a miss on the top and bottom line. It was also a rather meaningful revision down to TFI's earnings per share forecast. So they're now calling for EPS for this year in the range of $6 to $6.50. It was, the last we heard, in the range of $7 to $7.25. And that was already a revision from the previous quarter. As expected, what all of the analysts told me today was that the stock performance today is largely tied to the collapse of TFI's rival, Yellow Corp. And, of course, the CEO's very candid comments on the conference call. So if you're not following the ins and outs of Yellow Corp, the Teamsters revealed this week that Yellow will be shutting down and filing for bankruptcy. It is expected to benefit many of Yellow's rivals. For TFI on the conference call, the CEO said it will help them build density. Stifel actually said that it will enable them to build significant density. Pricing will improve as well. And we also heard more specific commentary from rivals like ArcBest, which said that they'll see a 10% roughly growth in shipments. Now, the CEO of TFI had some curious words when he was talking about this situation. He said that the company is lucky. He said this, quote, "With the demise of one of our peers, this is a lucky event for us. It allows us to build density." We spoke last hour. I don't think lucky is the best choice of words when we're talking about, you know, the demise of a nearly century-old company and thousands of jobs. But no doubt this is going to benefit TFI and all of its peers.
Well, let's bring in Jason into the conversation, Jason, because the stock had run up as news of Yellow was coming up. It's up 25% into the quarterly results. I mean, if you're a shareholder, how much more of this Yellow benefit can you hope to capture?
I think it's more than just a Yellow benefit. And remember, the run-up started in mid-June. Yellow's had problems for years, quite honestly. And what we've seen was a steady flow of freight diversions from Yellow to competitors like TFI. So that's really not new news. And if you go back to the earnings itself, I think most investors on the buy side were actually expecting a reduction in near-term estimates. That's been sort of the call du jour, if you will, on transportation earnings this quarter. But I think if you look out, absolutely they're going to benefit from building density. I think Elaine on the call referenced that they were running at 23,000 shipments a day prior to Yellow's demise, and now they're already up to 26,000 a day. That's a pretty quick bump to add to your density. And then I think there are pricing opportunities, not only with existing customers as contracts come up, but also if you look at a general rate increase, which was sort of hinted at on the call for the back half of this year.
Which competitors of Yellow do you think stand to benefit the most from its ultimate demise?
Yeah, well, we've written extensively on this. I think, you know, guys like Arkansas Best, a fellow unionized carrier, long-haul business, guys like TForce Freight for TFI, another fellow unionized carrier. And then I think there's it goes everywhere in the marketplace, but sort of the higher the service level of company, like somebody like an Old Dominion, I think the less freight flow, if you will, is sort of like the difference between shopping at Nordstrom's and shopping at Walmart.
What's going on under the hood here? It's almost like we're getting mixed signals about where the economy is headed, the manufacturing sector versus the consumer, and yet you're seeing this company rally so significantly. If you're worried about a recession, is this a stock you can still own?
Oh, we think you can. And remember, trucking stocks tend to be sort of early cycle plays, so people sort of anticipate the recovery. We've been in a freight recession all year long. So in terms of the word recession, the transportation guys are already seeing it. So I think investors are playing for the way out of here, which I think is going to be sometime in 24. The back half of this year is probably still going to look a little bit sluggish, albeit maybe sequentially better.
Now, it might not be sluggish in terms of deal flow. We did hear from TFI's CEO that they're planning to have this, quote, fantastic transaction. He used that word fantastic a couple times. What are you expecting for M&A in the sector, and specifically with TFI for the balance of the year?
Well, TFI has always been a leader in M&A, and I think even at the beginning of this year, they talked about maybe $200 million in M&A. Those were more of the tuck-in type transactions. This one sounds like it's going to be more of a mid-sized transaction between now and the end of the year. Seems like it might come down in the logistics space, and it really makes sense. If you look at the multiples right now out there in the space, they've been coming down because what we've seen is those financial buyers that were competing against the transportation companies like TFI are really falling out of the play and how much they can bid on these acquisitions because their price to borrow has gone up.
I also wanted to ask you about cost cutting. Again, on the conference call, TFI CEO talked about, he compared the company actually to an elephant, saying that they're again, I'm quoting, they're big and they're fat and they need to trim down. Do you think that, how do you think they'll be able to sort of thread the needle where they can cut those costs while still taking advantage, of new opportunities that arise from Yellow?
Yeah, well, they were specifically talking about their US LTL division when he made those comments. And I think we've already seen a 15% drop in terms of the cost per shipment that they're already doing. Remember, when they bought UPS Freight and turned it into T-Source Freight, UPS Freight was a loss leader for UPS. They were using it so they can sort of bundle to get more parcel business from their customers. So this is sort of a longer term play to turn this company around. They're rejiggering sort of the freight profile of the company. And a couple years out, we think this company is well under a 90 OR.
You also cover other areas within transportation, the rails, which have hit a bit of a stumble. And there's a thesis out there that we're going to start to see movement within the rails away from, the CSX, the CN rails of the world, and into Union Pacific because of a new CEO appointment. How are you thinking about the balance within truckers, in transportation, the truckers versus the rails?
Well, I think investors are going to really start looking at the rails sometime in 24. Right now, for the U.S. rails, what you have to worry about is what's going to come down the pipe with regulation. There's stuff coming out of the FRA, there's stuff coming out of the STB that actually could hinder some of the stock performance in the near term.